Hey, Kevin here, top one financial advisor and best-selling author, and we are here to talk about the stock market. One of y'all then slid up in my DMs and asked me, how do you read the stock market? So I'm going to take a few charts, break it down, and just give you the high-level overview of like, hey, what's going on here? How do I understand this? And what do I use to do the next big thing? But I will tell you this. It is easy to do. You're going to see an explanation within 15 minutes of how everything works from a basic level perspective. Two, I'll say that there are dozens and dozens of charting tools and techniques that people use. I'm just going to give you the basic intro. You want to learn more about it? Comment and tell me that you want to learn more about it, and we can talk about it and get into formations and all that type of stuff. However, I will say that it is not required. It's not required for you to be the best charting expert and the best reader of the markets to be a good investor. All it really takes is a little bit of research and a lot of, confidence. Well, no, not confidence. I would say more of more discipline to stick to your plan. So example is, you can read up on Apple right now. We're going to dissect Apple, if you will. And it's easy business for you to understand. You would have made money this year. You would have made money the last 5 years. You would have made money the last 10 years. And you don't need a chart to tell you that, right? You can easily tell whether or not Apple is a good company, and you can look at a chart to prove that, and we're actually going to do that. But the first chart you're going to look at, it's a line chart. It's super simple. This is the first chart you see on Yahoo Finance, the first chart you see on Public. It's like the intro. So I'll start there. I'll get into candlesticks and explain a little bit more about what that is. But again, you don't have to be an expert. This is just an intro video. But if you do want to learn more, feel free to let me know in the comments. All right, let's get to the video. As mentioned earlier, I want to hit the whiteboard. Y'all know I love teaching and drawing stuff, even though I'm not the greatest artist. But let's go ahead and break down how to read the stock market. I'm going to use an example of Apple, but this applies for any stock or ETF. It's all the same. The mechanics are the same. The picture is going to look different depending on how much the company has grown or lost. But again, it's going to look the same. So let's go through a lot of the basics. And I have a different chart that I want to show you to kind of give you a little bit more detail. All right, so first, this is the ticker symbol, AAPL. Every ETF, every mutual fund, every stock that is public, which means that me and you can buy shares in it, is going to have a ticker symbol. Again, AAPL, that's Apple. JPM is JP Morgan. MSFT is Microsoft. I'm just thinking of some, but that's the ticker symbol. The next thing here, these are the first things that I always look at. This is the price. So one share of Apple right now, and this is obviously going to change every single day. This is going to change. But right now, one share is $171.18. For one to buy a full share, that's how much it is. It does not matter anymore whether or not you get a full share, because if I got $17, I can buy some of this. If I've got $100, I can still buy some of this. If you don't know what fractional shares are, where you been at, make sure you click the link in the bio. You need to shoot me an email so you can learn more about fractional shares. All right, so that is the price. Now, the next thing here is the change in price, which means that from today to yesterday, this is how much this stock grew. So it grew $5. If you invested in one full share, you would have got $5.86 if you sold it, right? So I had to buy it and then sell it today. So I would have bought it yesterday, I would have sold it today, I would have made me $5.86 for one full share. If I had 10 shares, that would have been $50 and some change, right? If I had a half a share, that would be $2, maybe $3 and some change. So however many shares you have, you're multiplying it by that particular gain. So it's $5.86 or 3.54%. It's the same thing. That is how I read just basic stock market stuff. So a lot of times when you are watching CNBC or you're at the airport and you're seeing these ticker symbols, what you see usually, you'll see this. Y'all know I can't draw. You'll see AAPL. You might see a triangle going up saying that the stock was up, and you'll see 5.86 is usually what you might see. Or you might see, Apple triangle up, saying that the stock was up 3.54. Yikes, that looks like a 9. But y'all get it. I'm terrible at writing. So that just shows you, scroll across the board, and that tells you, hey, that the stock market is up, this particular stock is up. That's how it works. So that's step one of reading the stock market. Now, the second thing is the chart. People use charts for different reasons. I'm not going to get too detailed into that, because when I say people use charts for different reasons, I mean people can look at one chart and have 50 different meanings of what they interpret that to be. I actually did a video on that, how you can look at one thing and see 4 different things. But basically, what I'm looking at here, and this is what I do, a part of my investment strategy, just a piece of it, and what I teach my students too is, well, is this company going up or down? And right now, it is obviously going up. And what I look for is, the past year, that's relatively recent, this company's going up, I'm going to do some more research. I'm not just going to look at this chart and just invest in it blindly. I want to know, what does Apple do? Which we already know, right? We know what Apple does. I know how they make their money, so on and so forth. I want to make sure that you know that for whatever it is that you're investing in. But I do see that pretty much this company is going up. It has its ups and downs. So that this is going to give me an idea. Say, hey, look, if I invest in this, it might not go up every day, and that's fine. That's totally fine. And I know that because I see how it's acted in the past. It does not predict the future, but it does help say, look, it's going to be up some days, it's going to be down some days. But it looks like over time, I'm going to be okay. That is what a chart helps me to do. What I see new investors do sometimes, and where I see a huge issue, is that some people will just jump into something and not even look at this. They don't look at a chart at all. And there will be times where I'll ask you, right? If I ask you, you're a new investor, would you invest in something that's down 54%? You'd say no. But then I go look at your portfolio and you have 10 different stocks that have done exactly that. This is why this is important and why you want to look into it. And this is from Yahoo Finance. Yahoo Finance is totally free. Okay, so that's one chart. This is the most common chart people look at when they're just generally investing, buying and holding for a long term. A trader will try and say, instead of just buying it here and just holding for a year, holding for 6 months, holding for however long you want to hold, a trader says, well, I think I can either make more money or make income. I mean, I'm using that money right now at certain spots. So maybe if I knew that I could buy it here at 140 and sell it at 171, that means I'm making $30 profit for every one share that I own. Maybe they're trying to say, well, buy low, sell high. Maybe I'm buying it here and selling it up here. This is what traders try and do. It's a different approach, but it's using the exact same company. So what traders do, and this is probably what a lot of people think they're doing when they're investing, or try to do when they're investing, but they're really not, is try and time those things. I think it's hard to do that on a consistent basis. Some people I know do it. Most fail, but I'll show you how to look at that too. So this is what most traders look like, or look at rather. This is called a candlestick chart. It is the exact same chart from earlier. It just looks different and tells you different information, or more information rather. So you can see it's still Apple, still at 171. It is still mostly the same shape as earlier. As you can see here, they're pretty much the same. Okay, but it gives me different information. As I see here, I don't really know, right? In the same time frame, I don't really know what was an up day or a down day. I know this is down, right? I know that. But this time here, this entire time, were each of these days up, or were some of those down? I don't know. Well, a candlestick chart tells me that, and tells me how many days was it up or down over the time frame that we're looking at. So if you look down here, this is every one day, which means, I'm going to zoom in here. Here we go. What this is telling me is that each one of these candles, this one, and this one, and this one, all these are different days. So these are days, I guess, in what, September, if I look down here. So y'all can see that. So I'm looking at September, and these are different days in September. Now, the way that this works, and the way that a candlestick tells me more information is this. See this red candle here? This means that in that one day, the price dropped pretty significantly in that particular day. I also see that it dropped 1, 2, 3, 4, 5 days before things started to level out a little bit. So if I'm looking to trade and make some moves, maybe I'm looking at something like that. But also, it tells me this. If I'm looking, let me see if I can pick a better candle. Let me zoom in a little bit more. Notice how you see these little shadows, or what some people call wicks, these little black lines. This is a good one right here. This tells me how price moved in that day. So closing price, let's even look at today. If it'll zoom up for me. Or even yesterday in this video anyway. Y'all could be watching different times. So notice this long black line here, This means that it was as high as $170. A little higher actually. About 170, maybe 170 and 50 cents or what have you on that day. However, it didn't close that day. So it actually closed down here. That's how a candlestick chart works. So basically, maybe I should have drawn this first. So if it's red, this means it closed, which means that's the price it is now. When the market was closed, that's the price that it was. So today the market closed at 171. So it was a down day. It closed here. It opened at the top. It closed at the bottom. But during the day, it was as low as whatever this price would be, and it was as high as whatever price this was. This means the price moved throughout the day. The bigger the candle, the bigger the move. The smaller the candle, the smaller the move. And traders use that to kind of time things and pick the prices and places that they want to be. So if I'm looking, again, this is just the biggest one here. Price moved a lot on that day. For whatever reason, maybe it was earnings. I don't know what happened on that day, but that's what I'm looking at here. Also, if I look over here, it had, about 3 days of big movements up. So that means that, hey, the market something was going great about Apple. For 1, 2, 3, 4 days, things were moving in an up direction. And really, days 2, 3, and 4 were really big in an upward direction. So that's pretty much how it works. Now, you can see here that it moved up, but it ended up closing actually down a little bit. So whatever we thought was good on that day, market didn't say so. It started off great. Maybe some news came out. Maybe it was a virus. I don't know. But it ended up coming down. So what traders do is say, based on a formation, or, every trader has their own techniques and things. They try and figure out, where is price agreeing? Where are some formations? What are some things I should pay attention to? At what price should I decide to come in and pick up a stock? So if I'm looking at this, maybe they're saying, okay, well, I like these little small candles. Maybe I'll wait until price comes down here to 150. I'm going to buy it at 150. Maybe they say, hey, when it comes down to 140, I'll buy it at 140. Maybe if it comes down to 160 again, and who knows, it may or may not get down there. Maybe that's when they're going to pick it up and buy it. And they do a lot of different things to measure that. So some use formations. That means that, it's making a certain shape. I'm not really big into that because anybody can draw a shape and say it's something. Some people use what's called support and resistance. There are computer generated lines that will help you do that. I'm just going to draw one physically, and maybe they're saying something like this. I've actually talked a little bit about this before, about support and resistance. We're saying, well, if I draw a line here, at what points will this stock come and touch this line and bounce off of this line? These are going to be my entry points. So this was the point for me to buy. Somewhere here was let me draw it again. Somewhere here might have been a point for me to buy. This was a point to buy. And that maybe eventually the stock will come back down here. I'm going to buy it again. That's the thought. That is, again, doing this consistently in real life is a bit different. There are a bunch of techniques and things you can use to be better at it if that's what you want to do. But that is it. That is how you read the stock market. I've got my basics up here, my ticker symbol. I got my change in price. I understand my candlesticks. This is a super simple example. I can do a whole video on candlesticks, but that's pretty much it. I got red is bad, or red is down. It doesn't have to be bad. Green is up. Long candles mean the price moved a lot. Small candles here mean the price didn't move that much. These mean things in the background if you're really, really into trading. But that's pretty much it. That's all you need to know to really understand how the market works on a basic general level. If you're somebody who, and I think especially if you're a beginner, you don't really need this chart down here. You don't need it if you are just starting out. I think you need to start out and be a long-term investor where you're buying and holding and then come back and regularly reevaluating your investments. And then once you're comfortable with that, then you can try and get in and decide, be more fancy and find those entry points if that's what you want to do, but that's not required. All right, so that is it for me today. I wanted to, again, answer the question. Thank you to whoever asked it. I don't know if it was on public on Instagram, but thank you for asking. Make sure that you are staying up to date with all the content and things like that by signing up for the public app if you're not already on it, and then making sure you're on the email list. I love doing videos like this. So you got more questions, if you want a part 2, you want to learn something more about the stock market, let me know in the comments. I do read the comments, I do respond, and I try to do everything I can to help you become a better investor and to really understand the stock market and to make it simple. All right, that's it for me. Talk to you guys later. Bye.